Hello and welcome to the Paris Fintech Forum Communities Programme. I'm Elliot Gotkin, I'm a journalist and with Laurent Nisri, co-host of this exclusive video interview series produced with the support of Solaris Bank, Rise and BPI France. Now, we talk a lot about what it takes to found a fintech unicorn. Our guest today has done it twice, making him one of just a handful of people in the world to have done so. Best known perhaps as the co-founder and CEO of Lending Club, he's now co-founder and CEO of Upgrade, a challenger bank that focuses on providing credit. So please welcome Renaud Laplanche. Great to see you, Renaud. So what's the big idea here with Upgrade?
Thank you for having me. Yeah, so Upgrade, as you said, is a challenger bank really designed for a mainstream audience. So a lot of neobanks and challenger banks in the US and Western Europe have focused on underbanked categories or younger populations. We've decided to craft products and distribute products that are really appealing to a very broad swath of the population, to people who are not underbanked. I mean, our customers typically bank with Wells Fargo, B of A, or Citi, but we offer them better experience and more value than they can get from their traditional bank. And as you said, part of that is credit. I think for that population, credit is a big part of a banking relationship, and we offer our customers more affordable and more responsible credit products.
So how is it that you're able to focus on credit, which generally is seen to be as more of a bigger revenue generator, and yet many of the other challenger banks aren't? Why are they not doing it and you are?
That's right. Credit is 70% of banks' revenue. It's often, again, a big part of that banking relationship. It's sometimes the number one reason why consumers would seek a bank relationship is to obtain credit. So I mean, credit is hard, right? We're lucky that we started with Lending Club, and so we learned sort of how to provide underwriting and servicing. It's also just hard to get started. There's a cold start problem with credit, both in terms of data, for like training the algorithm to know what would be a good or bad credit risk. So you can't like build a credit platform overnight. It takes quite a bit of time, but also just in terms of the capacity to disburse of billions of dollars of credit every year. You can do it one of two ways. One is to build a really big balance sheet, and that's often not the best way to go when you're a fintech startup and you're trying to grow fast and in a way that's capital light and capital efficient. The second way is really more of a marketplace model, where you basically sell loans or credit card receivables to investors on a daily basis. So that doesn't require much capital, but it does require a long track record so that investors and loan buyers would have the confidence to buy sort of billions of dollars of paper every year.
I guess it helps that you kind of founded, a marketplace lender beforehand, and so kind of done that kind of part and had the experience. I saw that the Financial Times had you at, I think, the top of its fast growth companies list. That must have been, a great feeling for you, a kind of real vindication of your company. What can you give us a sense of the kind of growth that you've been experiencing, and if that was kind of turbocharged or impacted by the pandemic?
Yeah, no, it's interesting there. The Financial Times rankings was between 2016 and 2019, which really covered the first 3 years of Upgrade. But since then, obviously, 2020 got into a sort of terrible pandemic that brought a lot of pain and suffering to millions of people around the world. But I have to say, in our case, was actually a plus for business. I mean, I used to joke with an investors who had asked me like early in 2020, so what would it take for fintech to really become mainstream and for like regular people to ditch their bank and adopt fintech? And I told him, well, I don't know, you have to like close all the banks in the country for 6 months and show people that they don't need them. Well, that's unfortunately what happened. With that, I mean, with many bank branches being closed, I think a lot of mainstream consumers sort of had to make the switch, and sometimes they adopted the sort of mobile app provided by their bank, but many times it was an opportunity to try something new, and that drove sort of a lot of people to fintech companies. So I think that was the sort of the trigger that we all needed. So growth has actually accelerated since, and right now from 2020 to this year, we're up 3.5 times. So we're 3.5 times bigger than we were early, like before the pandemic.
I hope no conspiracy theorists are watching and seeing your suggestion that the banks, if their banks will close, that would be good for business. Just briefly, more on the company. You've raised, I think, about $200 million, including from investors like Santander. Any more plans for fundraising in the immediate future?
Yeah, we've been on a path to raise a new round every year. We did one next year, so probably do one this year as well. It's not a necessity in our case because we're already profitable. I mean, that's one of the sort of side benefits of having started with credit and having a strong monetization engine compared to a more debit-based or payment-based neobank. We already have the sort of the full monetization strategy running. So we're already profitable, even though we're growing very fast. It's profitable growth, which is great. So we don't absolutely need new capital, but there's an opportunity to sort of raise capital once a year, and we'll continue to do sort of probably smaller rounds than a lot of the other neobanks, but so just continuing to establish a new valuation mark, which is also good for the secondary market and to let sort of early investors and early employees get some liquidity.
Now, as some people might have noticed, you don't have an American accent, even though you're based in California. You are a Frenchman in the US. How did you escape being, I think you were a lawyer, to becoming a high-tech entrepreneur? Was this always the plan?
No, it wasn't. Yeah, I mean, it all happened by chance, really. I mean, I was a lawyer, sort of working for a American law firm in Paris. The firm sent me to New York, a great law firm, by the way. I'm Gary Gottlieb. They sent me to New York for what was supposed to be a 6-month sort of stint, and that was 1999. It was the perfect time to leave a law firm and start a sort of internet business, which I did at the time. So yeah, I left the law firm and ended up staying in New York for again what was supposed to be again a short period of time, and it ended up being a lifetime.
And Lending Club is perhaps what you're best known for. I'm sure Upgrade will, in time, perhaps be what you're even better known for. But Lending Club wasn't even your first startup, but it's definitely the one that put you on the map. I think you grew it to like almost a $9 billion company. You oversaw its IPO. But within 18 months of that IPO, you were out of the company. Now, I don't want to rehash, what's probably water under the bridge now, but it must have been pretty devastating on a personal note to have to leave the company that you created.
For sure. I mean, just one observation on that trajectory. You're right. Lending Club wasn't the first firm. The first firm was a $10 million exit. Lending Club to get to 10 billion. So we're hoping with Upgrade, we're continuing the same kind of multiples. But yeah, no, that being said, Lending Club was so the overall experience was amazing. We got to build a fantastic product that really changed people's lives and really be part of the early days of fintech and really establishing that industry from the get-go and hopefully sort of blazing the trail for a lot of other entrepreneurs over time. So taking the company public was also a very big moment for fintech. Really was the first fintech to go public. So all that was very positive. Certainly the last few days were not as positive, but it's water under the bridge now. I think it was a painful moment. It was very disappointing. A lot of disagreements with people I sort of trusted and put a lot of sort of confidence in that turned out to be misplaced. But I think we've all moved on now, and in a way it was a blessing because we got an opportunity with Upgrade to build an even more ambitious project, and sort of use all the sort of all we learned about credit, but sort of incorporate that into a broader sort of challenger bank design, a challenger bank that's based on credit. I think we now have a little bit of the best of both worlds.
Okay, I'm sure there were lessons, both good and bad, that were learned from the Lending Club experience, which you can now apply to Upgrade for the benefit of that company. But Renaud, look, don't go away, because we're going to take a very quick break now, after which we're going to continue our conversation with Upgrade co-founder and CEO Renaud Laplanche. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Renaud, I've got a few more questions for you, so let's talk a bit more about the kind of ecosystem and the economy in general. There are some great fintechs emerging in France and in Europe. We're talking about Alan, Tink, Klarna, to name but three. Something that perhaps wasn't the case when you were still living in France. Do you think Europe now is catching up with the US? And if not, what more does Europe need to do to kind of become more of an incubator for some of the world's biggest tech companies?
I think it is catching up. I mean, you see, just a few years ago, like the main ambition of a sort of European fintech was to launch in the US. That was like part of the business plan. Like every single business plan included, like really the US as the final destination. I don't think it's the case anymore. I think some of the companies you mentioned do have a US presence, but their main operations are actually in Europe. And clearly that's where their base was, and a lot of the capital they raised initially was located. I think what's probably going to be really a key consideration in whether that movement is sustainable or not is going to be watching the exit, right? If I think one of the reasons why you've seen so much sort of success in generally in the startup ecosystem in the US, part of it is just capital formation and exit. And so we've seen that in Europe there's been great capital formation. Now the question is going to be around the exit, because the exits are what really sustain the everything, right? It's in many ways. Gives institutional investors a benchmark and a sort of replicable process, gives them their capital back so that they can rinse and repeat. But it also creates a sort of large number of individuals, like the early employees, who make a small fortune and become angel investors and fund the next project. So I think that sort of flying wheel that we've seen in Silicon Valley is starting to work great in Europe. But again, these exits have to be big, and you got to see something.
Yeah, maybe your next startup, you'll do it in Europe. But look, just finally, we seem to be at the beginning of a kind of post-pandemic economic boom, especially in the United States. Presumably, that means it's a pretty rosy near-term future for fintechs, banks, challenger banks, and especially those involved in credit. Is that your takeaway? You're kind of seeing the next year or two as being boom, boom, boom?
I mean, clearly there's now a perfect storm of the economy reopening, jobs coming back, the US consumer having a really sort of clean balance sheet, a lot less debt, extra cash from a lot of government incentives, plus continued support and accommodating policy from the Fed. Maybe another big sort of infrastructure package moving through Congress. So really a lot of sort of money supply into the economy, and sort of consumer confidence coming back at the same time. So all that contributes to with also a lot of pent up demand. Everybody having been cooked up at home, and now being able to travel and go to restaurants and movies again. So I think that's going to fuel sort of a lot of economic activity over the next few months.
Right. I guess they've got to spend all the money they've been saving up before they start taking out credit from Upgrade and other banks and financial institutions. But obviously, hopefully, positive times ahead, both health-wise and economic-wise in the US and in many other countries around the world. But look, Renaud, I'm afraid we've actually run out of time. I don't know where the time went. So I really just want to thank you, Upgrade founder and CEO Renaud Laplanche, for joining me today. And I'm going to be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, you can keep up to date with all the exclusive interviews and content from the Paris Fintech Forum Communities Programme via www.parisfintechforum.com. Hope to see you next time. Bye-bye.